Well, hello, everyone. Thank you for joining us today at our Silicon Global online show. We have a wonderful guest today, Rafael Ratzel. You can see him here as one of our participants and our lead participant. And Rafael is joining us today from overseas,
Switzerland. Yeah,
Switzerland.
that's right.
Wonderful. Wonderful. What's the weather like there?
Oh, it's very nice. Today was a very sunny day. Quite cold, but beautiful weather.
Okay, well, good. Enjoy. Well, we're going to get to Rafael and our Q&A with him in a minute, so you can get your questions warmed up in the meantime. So those who are just joining us for the first time, my name is Rebecca Fannin. I'm the founder of Silicon Global and this show, Ask a VC, which we've been doing since 2020, many episodes, about 80 now. We also publish our newsletter. We have our Circle membership. Several of you are Circle members. We have our events. We have our CES event coming up January 7. We have an event in New York City with Ken Wilcox of Silicon Valley Bank and his new book, The China Business Conundrum. That's November 19th. So if you're a Circle member, you can join us for those two events coming up right away. And today with our show, Ask a VC Anything, we have Rafael and of course, my books, which have been tracing the tech frontiers of emerging markets, starting in 2008 with Silicon Dragon and then Startup Asia, which did a lot of India and Southeast Asia. Then Tech Titans of China, which talked about how the Silicon Dragon babies became titans, Alibaba, Tencent, Baidu, ByteDance. And finally, Silicon Heartland, which is a counterpoint to China and how the US is really boosting its industrial heartland. We're going to be hearing a little bit about industrial heartlands today, but that's going to be from China. So I'd like to just welcome Rafael to the show. Rafael, I met in Hong Kong just recently, and he has a terrific background. Just a few highlights. He is based in Hong Kong, but he also spends a lot of time in Beijing. He's been with TH Capital since 2016, spearheading international initiatives, and he's been responsible for this new fund for China. The TH Capital is helping Chinese portfolio companies go global. And Rafael has the experience, the educational background to handle all this. Dual degrees, engineering and business management from Hong Kong Polytechnic, MBA from Tsinghua University and MIT, and experience at Siemens and Bosch in Europe, plus other investment experience, cross-border investment at CMIG in Shanghai, Roland Berger in Beijing. So I can't think of anyone who has quite as much China investment and experience as Rafael does. So I'd really like to welcome him to the show and ask him a few questions and about what he sees today as the China landscape and how TH Capital is navigating it. So I'll just open it up to Rafael and ask him a broad overview questions. What I just mentioned, how is TH Capital navigating the China landscape today, considering a lot of changes in recent years?
Yeah, that's actually it's a very good question, Rebecca. And I think in the end, one thing that's very important is to recognize that there is a huge difference between the European and American tech landscape and the Chinese landscape, especially in technology. Whereas the key difference is that the cycles and the waves of opportunity in industries in China, let it be on e-commerce technology, on consumer markets, on education tech, and what we're looking at now, which is high tech, which evolved from initially industrials and upgrading manufacturing, the life cycles and these waves of opportunities are much shorter lived than what you see in the US and in Europe. So here we see major changes and disruption and entire industries going from boom to bust within 3 to 5 year cycles.
Hmm.
So while we're in a very dynamic environment, what's very important is to have a clear business strategy that can adapt to these changes, but is following a constant set of core skills and abilities that set you apart from competitors and especially also from international firms operating in the Chinese market. And that's how we are coping with the changes of the last years, which for us, fortunately, have been, I would say, rather beneficial because China has shifted the focus of its economic growth from the early 2000s until 2010, maybe all the way into 2014, 15, where it was focused on quantitative growth, so the total amount of growth, and it was all about the more growth, the better, to what we have seen in the last 7 to 8 years and what we will see even more focus on in the next 10 to 15 years, which is the quality of growth. So it's not only about absolute numbers, but it's really a question on what do we want growth to be based on? Where does growth come from? How does it translate into future opportunity, and also what kind of sectors of the economy is it based on? And
Right.
with that in mind, we are now looking at an opportunity set that's radically different than it was 10 or 15 years ago. So the names that you have mentioned in your publications, in the books that you've written, are very much part of that wave of quantitative growth.
Right.
Whereas now, and what our business model is very much based on, is much more focused on qualitative growth, and that's mostly located in technology growth. And when we talk about technology, we refer to what most people would consider deep tech or high tech. So
Okay.
it's not business model innovation, it's not consumer faced business optimization, it's not milking a broad consumer based market for ever greater profits. It's really instead focusing on how can we use what's already the biggest and most comprehensive supply chain and manufacturing base in the world, and use that to develop, commercialize, and then large scale deploy new technologies in advanced manufacturing, in decarbonization, so energy storage, energy generation, energy transmission, and sectors like quantum computing, like semiconductor value chain, like new communications infrastructure. We're now moving from 5G to 6G. How can
Uh-huh.
we take these technologies and create a more advanced society and a more advanced economic base that facilitates growth somewhere between 4 to 6% annualized growth rate, rather
Right.
than just trying to re-innovate and copy business models from abroad and base it on pure consumption and consumer spending. So that's the kind of backdrop that we're working with. And how we navigate that is by really focusing on our core capabilities, which is identifying and predicting technology trends and entering those new industries and segments before they really roll out that commercialization, and identify the leading players in those segments and subsegments and invest in those companies. So really identify the Chinese technology leaders of tomorrow today and back them with our investment in terms of growth capital.
Has your firm been doing this all along, or is this a shift in your strategy considering geopolitics?
So for us, we have actually about 15 years ago decided to focus only and exclusively on what back then was industrial investment. So, to be frank, 15 years ago, China was not a market and a destination for high tech and globally leading technological innovation.
Mm-hmm.
But back in 2010, the policy and regulatory shift was already pinpointing that this is a future focus field, an area. And with that pivot of strategy on a national level, we decided to really focus on industrial technology that evolved into manufacturing upgrading, manufacturing technology, and in the last 6 to 7 years into high tech. So our mode of operation, having a top-down industry research, focusing on high tech or hard tech companies that produce in a B2B environment components, materials, equipment to be sold to integrators and OEMs, that has not changed. What has changed is the level of sophistication, innovation, and competitiveness of the technologies that are being produced by the companies we back. As China has evolved from a low-end manufacturing economy to what is now already one of the leading high-tech economies in the global environment.
Right. So these are not startups that you're investing in, I take it then.
That's right. So the majority of our capital is deployed in companies that have moved beyond the technology risk and that are currently in a stage of really being able to commercialize, to productize and commercialize these technologies to customers who are recurring customers that purchase components, materials, equipment to integrate into their manufacturing chain and industrial value chain. So that's the big bulk of our capital to be deployed. We have some early stage investments where we are backing breakthrough technologies, which with about 20 to 25% of commitment of capital available, then 50 to 60% goes into that growth stage where it's all about commercialization. And then a small bit goes into more mature companies that are really all about scaling and rapidly gaining market share.
Okay, I see. Well, that's great. Maybe you could give us a few examples from each of these sectors.
Yeah. So for example, I mean, as I mentioned, we have three, I would say, focus sectors. The first is industrial or advanced manufacturing, which is focused along the entire value chain of different industries, and starting from materials, equipment to components. And that goes into areas like aerospace, like photonics, like new energy vehicles. And to give you some concrete examples, we have, in terms of materials or material science, we have a company that produces globally leading high power diode laser stacks for industrial laser components and systems to be used for industrial laser-based welding, for specific medical treatments. And that's a company, it's originated and based in China, but has been recognized as a global leader. They've won the Photonics at the Photonics West in San Francisco. They won the SPI Award, which is sort of the Oscar of the photonics industry. That's one example. We have a company doing 3D printed fuel injection nozzles for airplane turbines. We have in the second field or area, which is new generation information technologies, which is chip semiconductor value chain. We have a company doing, for example, front-end metrology and inspection equipment that really, inspects wafers coming out of the production process in the fabs. We have a company that's more in the component business. They provide infrastructure and chips and clock chips and timing devices for 5G base station components and transceivers and receivers and transmitters. And in the decarbonization field, we have a company, for example, active in energy storage. They do compressed air energy storage to be installed next to renewable energy generation projects, for example, solar farms, wind farms, where they use proprietary technology to compress air, store it, and then reharvest the energy when needed with turbines, which is now already in a very mature application scenario, and they have a huge rollout throughout China. So these are three examples, from materials to components to equipment to full-sized industrial solutions with a very strong kind of IP angle and technology components included in their business model.
So these are all Chinese-born companies and with Chinese-born innovations. No,
That's right.
okay. Any
But
international,
oftentimes, but also to maybe to touch on that point, oftentimes they are Chinese born and grown companies, but a lot of the talent is not just China-based talent. It's people who come back with an overseas education background. It's people that have worked in, international companies. But also increasingly we see international talent joining these companies. So here somebody asked the name of the photonics company. It's called Focuslight,
okay,
Focuslight Group based in Xi'an. And if you look at that company, not just in the staff level, but even their research department, even the board of directors, you see a number of international talent being actively involved in the management and innovation of that company because it's moving from a Chinese company, it's become a global technology group in the photonic space.
right, right. So are any of these companies having to deal with the export controls on advanced technology from the US into China?
So we have invested in a total of about, so over the last 15 years, we have raised and deployed 5 funds. We're just doing a final close on our sixth fund, which is also the
Okay,
first US dollar fund.
okay,
And we're also about to close our seventh fund, which is an RMB fund.
okay.
Um, Now, with all that history, we've deployed capital in about somewhere 100 to 120 companies. So for sure, there are a number of companies who are in one way or the other affected by these kind of export controls, right?
Mm-hmm.
While they are not directly targeted by these controls, in these kind of supply chains, these are very intricate relationships between, even what kind of software you use for chip design, what kind of chip you use to include into your module, what kind of, CPU is used in the application of the electric vehicle that you might have the battery management system.
Mm-hmm.
And if those change, if those are affected by export controls, even by tariffs and so on, it has an impact. I would say it's hard to say an exact number how many companies were affected and also to which degree. But in let's put it this way, in the end, this kind of technological competition and the resulting, restrictions, tariffs, and so on, they will have an impact on some of these companies,
Right.
which also in the end justifies that or confirms that these are actually very competitive companies. Because if you're not
Sure.
competitive, then
Right.
nobody will pay attention to you.
Sure. What about the new administration coming in to Washington, D.C.? What is your view on how these US-China relations are going to continue to evolve? What impact do you think it will have on your portfolio companies and also your investing style and management?
Yeah. So, I think in the end, every administration has their own approach. Oftentimes, you have to see how it plays out before you can really give any judgment on this. And also we are not a political commentator. I think for us and for our investment approach, we stick to what we have learned over the last 15 years. We focus on finding technology leaders. We also focus on companies that are having a global presence, companies that have global customers, not just
Okay.
in the US, but also in Europe. And
Okay.
these companies are often very well prepared to deal with any, upcoming changes, new policies, and so on. And any good company that's well managed should not be relying on any single market or customer that may then be, taken out of the equation.
Right.
So while, there will be change, I don't know what it will look like. We will deal with it when we face it. And I think with a sort of a fairly spread risk across different sectors, different
Yeah.
areas with various portfolio companies with different approaches and a global customer base, I think we're in a good position. And again, with any competition, there's also a lot of opportunity.
Okay. So let's talk about your own firm. How many, you mentioned that you raised several funds. and you're on,
Hmm.
you raised 6 funds and you're on your 7th fund right now.
Hmm.
And just give us some details about that. How much have you invested overall? When was what was the first fund? Has there been any change in strategy with these funds? And why are you doing an R&B fund right now?
Yeah. So, I mean, the funds that we have invested in the past have been R&B funds and are
Oh, okay.
mostly yeah, and are only backed by Chinese domestic investors, which are very institutionalized LP based. So it's in, the
Okay.
traditional kind of spread across asset managers, insurances, banks, and so on. However, we also decided to raise our first US dollar fund,
Okay. The first
which we
US dollar.
started.
Mm-hmm.
That's right, which we started last year. And also Howard mentioned or asked how the US fundraising and USD fundraising environment looks like, what was our experience, and so on. And to cut a long story short, of course, it's a different and difficult environment. It's changed significantly. Fundraising globally has reduced a lot, but even more so the US dollar deployment into Chinese funds.
Right.
With that being said, and the environment being difficult, we've still been successful to raise this first fund, which we targeted at $100 million, a bit smaller than our R&B funds, but sufficient to show or build a first showcase for an international investor base, which for this fund has also been quite global, including Europe, Asia, Middle East, and the US.
I
So we
see.
still see existing interest, but of course with a bit more differentiated, let's say, approaches from LPs, more questions around regulatory impact, more questions around any potential restrictions, and so on. But when the people take time to understand the situation, understand actually also that contrary to the public perception, the Chinese markets and financial industry has become increasingly accessible for international capital rather than closed up. People understand that there is a lot more opportunity for interesting deals, interesting funds to access in China than there was 5 to 10 years ago. But at the same time, they also want to have visibility and a better understanding on what potential, US and other countries based investment restrictions could look like. So I would say that fundraising is difficult. It's not impossible, no, not at all. And it has become a much more differentiated discussion where you have to have more of or provide more background and depth on considerations and structural
Mm-hmm.
preparations you have made for any kind of regulatory, potentially regulatory changes.
Okay. Is that fund closed now or are you still raising?
We are closing in 4 weeks. No, sorry, the end of December, so five weeks.
5 weeks. Okay.
Yeah, that's right.
All right. 100 million.
Yeah, that's right.
Okay. Are any of these companies that you're investing in, are they in sensitive areas at all?
No, no.
They're
And
not.
and that's something, no, because in the end that will lead to problems sooner rather than later.
Yeah, I see. Sooner
And
rather than later. Uh-huh.
and you can see that these sensitive, areas are actually very well defined. And if you look at investment restrictions from the Chinese side, which has certain restrictions on deployment in China in certain sectors, these are sectors we have not touched in the past and are not touching currently with our investment.
I see.
And interesting enough, we have several portfolio companies where the founders are foreign nationals, but are ethnically Chinese, have lived abroad for a long time, are now coming back to found companies and build companies, based on their insights on technology, on the track record they have had. So it's, some of
Right.
these companies are even built by people who are not even Chinese nationals.
Sure. Okay. And what about your own team at TH Capital?
Yeah.
What's the makeup? Is it mostly domestic Chinese or foreign
Yes. I
nationals
mean,
who have gone back to
we
China?
the large majority of our company are Chinese graduates, are Chinese management, because we focus on identifying and investing in leading Chinese companies.
Okay,
The international component of our business is the part that I've built up over the last 8, 9 years,
I
and that
see.
my team is helping companies to break ground or
I see.
expand existing overseas markets
I see.
um, with them.
I
But
see.
we are a very China, let's say, focused. We are China originated and China focused fund, and also 95% of our team are based in Beijing, where I was based until middle of this year, and I only recently located to Hong Kong.
Oh,
So
I
it's
see.
it's a really domestically focused and based and skilled uh, GP, I would say.
Okay. Okay. And then how large is the international team? You're leading the international team from Hong Kong
Yeah,
now.
so we are 4 people within the company.
Are they all in Hong Kong or some of them scattered
No,
around?
no, we
Oh,
also have some people in Beijing and one colleague in Europe.
okay. Well, you have really great, very deep China experience. Um, and
That's right.
yeah, and you also speak the language fluently as well, right?
Yeah, that's right. I mean, for us, I mean, I would say enough to make it on a day-by-day basis. But for us, it's important because our customers, who are eventually on one side, the companies we invest in are based in China. A lot of our investors are also from China, and then now we're adding on a new group of LPs which come from abroad. So in the end, a lot of our business is still conducted in Chinese and
I see.
always will be. So this is it's a very, I would say, a very specialized local approach, which is also
Yeah,
nowadays necessary to be able to find the most competitive companies at the right stage of their development. Because once they've turned
right.
into, large, globally present and active companies, then it might not be the ideal point to invest in them.
So you've been investing in RMB, and I understand that most of the funds today in China are investing in RMB. The US dollar funds have pretty much left
Mhm.
China. But why are you now doing a US dollar fund?
So the rationale behind this USD fund was very simple. We have, I would say, a quite successful and sustainable business model in our RMB fund history and strategy. But we had an increasing amount of people from abroad who said that they had not previously seen that kind of strategy and specialization, but would be interested to participate.
Okay.
So to facilitate that, we built the first US dollar fund, which is essentially a feeder into the RMB strategy. So we use a Cayman fund in combination with a QFLP fund that goes through a QFLP fund and invests into these companies onshore in RMB. So essentially, and this is also due to the increasingly open regulation on the Chinese side, you're now able, as a foreign investor, to commit US dollar that is then deployed into an RMB strategy onshore, where the portfolio companies are registered onshore. You become a direct shareholder of those companies in China, and these companies will go public in China, and you will exit in China. But at the same time, you are sure that your money is converted back into US dollars through this QFLP license.
Well, is this
Meaning,
anything, okay, go ahead.
yeah, sorry. So meaning you remain and you are an international investor, but you get access to an asset profile or an asset base that is actually directly owned by you in RMB in the Chinese domestic market, which is very different from the traditional USD GP models in the past, which were all through VIEs going abroad, going IPO abroad, realizing gains abroad, and so on. So it's quite a different opportunity set, and it's, in my opinion, and this is already showing very clearly, the future of investing foreign capital in China. And we wanted to make that accessible to international
Right,
investors,
right,
going back to
right,
the origin of your question.
right, right. So, yeah, so this is opening up China tech in the industrial space to international investors pretty much for in a new way,
Yeah.
And it's pretty, this is pretty remarkable, I think. It's a big change from the past.
That's right.
But how does it change the risk of investing in these type of companies, given that this is a different structure of investing, and you basically have to exit in China, right?
That's right. I mean, we're not, let's say, we're not uh, in any way contractually or structurally bound to exit in China. So some companies go IPO in Hong Kong. Some might eventually choose a route of going IPO on overseas exchanges.
Right.
But the majority is still focused on going public in Hong Kong. Sorry, in mainland.
Okay. And how are those companies performing on the exchanges in China?
Overall, very well. I mean, it's the difference of investing in companies that are large cap or mega cap by the time they go IPO and are very much focused on growth models that are fueled by increasing amounts of capex, or investing in companies that are SMEs, essentially SMEs,
I
that
see.
have a very high entry barrier that's usually built around a strong IP portfolio
Right.
and a strong R&D capability and a strong product portfolio towards customers, and that are able to keep growing at a 20-25% annual growth rate even after IPO, and are able to keep a profitability ratio somewhere above 15 to 20% net profit.
Okay. So
So,
have any of
and
your companies using this new model, have any of them gone public yet? Would you?
yes, I mean we have had the IPOs since 2020. We have had almost 20 IPOs from our portfolio, and the last one is only about 6 weeks ago.
Okay. And these are all mainland China
Yeah,
exchanges.
we've had some. No, we had I would say maybe 2 or 3 Hong Kong IPOs in those last couple of years.
Okay. So I wonder how many competitors you have following what you're doing.
Yeah. So I
But
I, I
maybe
would
maybe
say
not the same sectors, but maybe this kind of structure, this new structure.
so. Even in our sector, there are competitors, and it's also it would be silly to say that there's no good competitors. So in any market, sooner or later there are several players, and it's good because a number of good players will define a market. They will raise awareness for a market. However, I think what's quite unique for us is that we have been able to take what's a very China-focused domestic investment strategy and competitive field, and we have been able to build an international or an access channel for international capital to that. So if you look at our competitors in the RMB environment, most of them are, I would say, I've not come across any that has the ability to provide that kind of access channel.
Right. Okay.
And in reverse, the ones who used to provide US dollar investment opportunities into China are usually not that familiar with these sectors and don't have a 15-year track record in the fields that we're active in.
Right.
So I think the
So,
combination, what's unique is that combination and that kind of bridging we've been able to do, rather than a focus on specific sectors or the ability to provide a certain US dollar fund structure.
right. Well, some of the traditional sandhill road firms have had to change their strategy too for China
That's
and
right.
raise RMB funds and hire local teams or work with local teams pretty much.
Yes.
And so also another thing, the government, I understand, is really responsible for about half the investment going into venture capital in China. So that's a huge difference as well from the government side. So I mean, how do you deal with the government in investing in these companies? Do you see them on as a co-invest? I mean, how does this work?
I mean, I don't think this is, in the big picture, it's very different from any, major economies in Europe or in the US. I mean, there's a lot of capital being made accessible for companies that are developing and growing in these target sectors. And this is all a top-down approach, right? Where the government in China and in the US and in Europe has an industrial policy or strategy, and
Yeah,
then makes sure that companies in these sectors receive sufficient funding.
right,
And this can be through, tax breaks, through infrastructure availability, through direct investment, shareholding, even venture investment.
Mhm.
And it's a very important factor to build an ecosystem, and B, provide capital for these companies. We see
Right,
that kind of capital in China as well, and it's, a very important growth factor. It's often, we see it as co-investors in deals. We see it as investors coming in after us, as local governments making sure that they have a very good, industry park
right,
infrastructure available for these companies that provide
right.
funding for CapEx, even financing, which is, very important, financing for new factories. They say we participate in sale and leaseback structures for very capex intensive equipment, which is often the case. Providing land, providing other resources, and there's a multitude of ways that they support, not just money, but of course also direct investment. And for us, it's more um, a complementary aspect rather than a competition.
Okay. Can you tell us about one of your breakthrough companies? You mentioned that you're investing in some emerging companies with breakthrough technology. Could you give us an example?
Yeah, I mean, we have for example, we have a portfolio company that is working in the field of neuromodulation, monitoring and modulation. We actually have two companies, both invasive and non-invasive type 3 medical device.
Okay.
They are able to cure epilepsy. They're able to significantly reduce, effects of Parkinson. They're also able to detect and sort of counteract certain
Uh,
neuro diseases and neurodegenerative diseases. So these are all technologies, in the US, you have equivalents that are very, let's say, very hot startups. This exists in China as well. We
sure.
also have companies that, um, develop very specific commercial applications for quantum computing, especially when it comes to large data computation for fields like modeling in biotech, in a biotech environment, right? That new drug development
Uh,
models. So
okay,
these are all, I would say, quite leading edge technologies and companies we've backed in the past, in
sure.
the past couple of years that solve these kind of critical questions.
Right. And you said there are parallel companies in the United States or in the Western world that are doing
Yeah,
pretty
often,
the
yes.
same thing.
Mhm.
Is the technology pretty comparable as well, the level of technology?
I think the level of technology, the sophistication, even the amount of patents, the novelty of patents, the total coverage of patents is often similar. Sometimes better in the US, sometimes better in Chinese companies. What Chinese companies are often very good at is being cost competitive, being
Uh,
very kind of speed competitive. So
okay.
um, they're able to innovate very fast and in a
Yeah.
very efficient manner.
Yeah. Okay.
Yeah.
So we hear a lot about Chinese tech and we see a lot of photos and graphics of marvelous Chinese tech, a lot in mobility,
Hmm.
high-speed
That's right.
trains and uh, advances we don't have yet in the United States. And even a question about 5G and 6G.
Hmm.
So China seems to be able to implement some of these new technologies a lot faster than the Western world does, or at least the United
Hmm.
States does. Can you comment on that?
Well, I think a lot of this, you talk about um, uh, really infrastructure related technologies, right? So we talk about high speed railway network, we talk about communications infrastructure. These are things where, China is able to have a very long-term strategy that spans across 5, 10, 15 years. And that's the time it takes to roll out these kind of technologies on a large scale and in a very deep coverage nationwide.
Right.
And, speaking from as a European, we often lack that kind of consistency of policy. We also lack that determination of implementation.
Uh-huh.
And the kind of regulatory framework and financing and legal framework that is required to do so. Because if you roll out a high-speed railway network of, now in the last 20, 25 years, it's been more than 30,000 kilometers or something like
Yeah.
20,000 miles of high-speed railway network. You need not just money, you need certainty for regulatory changes, you need certainty for legal environment, you need certain infrastructure commitments, in terms of land reform policies, local government support that needs to be continuous. And only with that certainty, you're able to make these kind of very long-term investments.
Yeah. Heard a
And
lot
the
of good
same
things
on the
about, yeah, go ahead.
yeah, and the same on the 5G and 6G question, right? Where
Yeah.
this is in the end, the technologies come from private enterprises. And when you look at someone like Huawei, right?
Yeah.
It's a private company. They have been the main developer of 5G. The reason why it's been installed in Europe, even though now Europe is starting to really, to take it out of some of their
Right.
infrastructure and base
Yeah.
towers and base stations and so on,
Yeah.
is
Mhm.
is not because it's not the leading technology, it's political reasons. And it's not my judgment to say whether this is right or wrong, but undoubtedly they have been the provider with the best technology. And we see the same in 6G, which is now already in pilot zones being installed and tested and rolled out in certain districts, in specific company campuses, and already now the framework being set that this can be rolled out on a citywide level and potentially nationwide level in the coming
Right.
couple of years in China. And as Harold mentioned, abroad in Europe, we're not even at a large scale 5G rollout, let alone the regulatory and legal framework for a 6G rollout.
Right. So the same thing goes with electric vehicles. The
Yes.
the number of very advanced electric vehicle companies from China has just been growing and really having a huge impact, not only in the Chinese market, but elsewhere globally. So at least outside of the US, but electric
You,
vehicles,
you,
yeah,
you see, if you look at, and this goes back to the point you also just mentioned in communications and
yeah,
railway infrastructure.
yeah,
In 2015, when we first looked at electric vehicle development in China, or new energy vehicle development in China,
yeah,
back then governments, both local and national governments, started implementing policies
yeah,
on developers of commercial and residential real estate, and basically set requirements and clearly outlining that they want developers, they require developers, and provide incentives also to have a certain percentage of parking spaces in new real estate developments
yeah,
with infrastructure to install charging stations.
yeah,
And unless you have that kind of threshold or requirement from a
right,
top-down perspective in the beginning to create that inertia, that
right,
first momentum, you will not, it's very hard to really kick this off on a national level. And you look now on the streets of Beijing, where more than 50% of all newly registered cars are electric vehicles, right?
mm-hmm. Oh, wow,
Because now, after 10 years of implementing that kind of policy, you
right,
see a sufficient amount of charging infrastructure, which is still the biggest bottleneck to EV rollout in Europe and
right,
the US.
right, right, yeah, yeah. Parking and long range.
That's right.
Long range, but yeah, so we also hear a lot about the Huawei phone. Smartphone is very high quality. We hear a lot about Xiaomi getting into all kinds of areas, including electric vehicles now too.
Yeah.
Can you just comment on some of these big tech companies in China and the technology you're seeing from them? I mean, are you What's your view of them? Is this the same as the US? Is it more advanced than the US or the Western world? Is China getting ahead of the Western world in terms of its technology progress?
Mm. I mean, a lot of those consumer electronics face much higher competition in China than they do abroad. Whereas,
Uh-huh.
in foreign markets, take the example you mentioned, um, consumer-focused electronics, right? Or consumer electronics like mobile phones. In the West, the markets have been dominated by Samsung and Apple for the last 10, 15 years.
Yeah.
And if you look at the speed of innovation and the kind of radical change in innovation, even within a company like Apple, it's not actually that significant, right? I mean, the iPhone, what now it's iPhone 16, still looks a lot like iPhone 13, 12, even, 11, 10.
Uh-huh.
It's always very gradual improvements.
Yeah.
It's rather slow. It takes several years for new models to come out. And you
Right.
see the same in the automotive industry, right? In
Right.
China now,
Right.
EV companies are able to push out radically different models with new features, with new capabilities at better price points every half year to 1 year. If you look at the traditional OEMs in Europe, the big, German companies, they sometimes have turnaround times of 4 to 5 years for new generation
Oh,
of vehicles
uh-huh.
to hit
Uh-huh.
the market. And this all comes from this fierce competition in China, both on innovation, creating novelty designs, functionality, and also price competitiveness.
Sure.
And that's why, we in the West, the other day I talked to someone about the new Huawei phone, which is now a threefold, right? It's basically an iPad that you can fold up to a not significantly bigger size than an iPhone. And in the end, you have both an iPad and a phone combined into one device. And this person mentioning to me, yeah, well, these are not very popular in Europe. Well, sorry, but the European market for smartphones makes less than 20% of total sales globally.
Right.
So we also need to get used to, places like Europe or even smaller individual markets in Europe being sort of the directive for what should be developed in the future
Right.
because of
And
their consumer preferences.
right. And China is, in many of these cases, the largest market for these devices, the
Yes, that's
largest
right.
market globally, more than
That's right.
Europe,
But
more than,
also
yeah,
all over Asia. So you see a
all over
huge
Asia.
proliferation of these brands in Southeast Asia, even in Japan, even in Korea. They have now again a very strong user base now
Huh.
going into Middle East as well.
Okay. Okay. Well, it's quite a change in a very short period of time.
Yeah, that's
So,
right.
yeah. Um, and you're right on the cutting edge of a lot of this happening. And I'm
Yes,
thinking,
that's our aim.
yeah, and I'm thinking about the Sandhill Road players who were on the cutting edge 15 years ago. Uh,
But
and now,
also
go ahead.
so just to jump in here on that thought, the US has a lot of very competitive companies and technology companies, and it always will have. So I don't think this is a question of who will win this competition.
Yeah.
I think it's more about it's complementary. It kind of spurs each other. It
Okay.
creates, a healthy kind of competitive environment, and that's important that we keep that. But I think in the future, kind of centers for technological innovation will probably be less than it used to be in the past. So less places, but the US will undoubtedly be one of them. I mean,
I see. I see.
US companies are very innovative, are very competitive, and I'm sure that US investors are still able to back them going forward and pick the
Right.
right ones.
So in China, what do you see today? We're wrapping up now, but I want to ask you too, in China, what do you see as the leading tech hubs today? Has there been any change?
No, I think it's still, the tech hubs are still Shenzhen for sure.
Yeah,
You have some areas like in Hefei, you have a lot of focus on semiconductor industry. The north
yeah,
of China, it's very focused on next generation aerospace. But I would say the technology hubs have formed. Xi'an is very strong on photonics. The technology hubs have more or less been formed, and I don't see that they would be changing significantly in the next 10, 15 years. And
Okay,
there is these industrial clusters, and it's very important to
yeah.
have this kind of cluster effect because you
Oh,
need
yeah.
in the value chain, you need upstream suppliers, downstream customers, and the geographical proximity is an important factor for a lot of these.
Oh, sure, yeah, and being close to a university, being close to a major
Yeah,
corporation,
absolutely. Yeah,
getting the government support for your technology. And yeah, no, it's all very interesting, I think. And
good,
um,
great.
yeah, any further thoughts from you?
I mean, for us and for me, I think it's just important that um, more people take the time and make an effort to think about innovation happening elsewhere but the US and Europe, and to look beyond the headlines. So don't just uh, read the big headlines in the mainstream media because that's very
Right.
biased. And
Yeah,
sort of ideally make the effort to take a trip and see firsthand on site
right,
in China, even in Asia, in Greater China, what the place looks like, what companies do, how advanced technology is, how integrated and applied and adapted daily life is to these technologies. It's amazing.
right. Okay. Silicon Valley leadership, future of Silicon Valley leadership, will it still be number one or not?
Yeah, I mean, I think they have a reason to be in that place, and I'm sure they're working very hard to keep that place.
Yeah.
So
What about, do
let's
you
see.
have any of these investments in AI foundational models like the Anthropics and all these uh,
Yeah, we also invest in
open
that
AI,
space. Yes, yes, yeah, in the equivalents in China. That's right.
the equivalents in China?
Yeah,
Okay,
yeah, yeah. But
interesting.
that's a very big topic.
I know, I
For
know. We'll have to have you back to talk about AI in China. And it's another really, we could definitely have a whole other program related.
that's fine.
Yeah, because you have such a wealth of experience and really appreciate you being with us today. And we'll be sharing out the recording to everyone. And
Okay,
thank you so
great.
much. Have a good rest of your day and hope
Thank
to
you.
see
You
you
too.
on the trail again.
Absolutely. Will do.
All right. Thank you.
You
Bye
have
bye.
a good day.
Yeah. Bye
Thanks
bye.
a lot.
Yeah.
Bye
Bye
bye.
bye.